Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 18th, 2025, and we're diving into the Home Depot's third quarter fiscal 2025 earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. The Home Depot, the world's largest home improvement retailer, has just released its Q3 results, and there's a lot to unpack, from sales growth to updated fiscal guidance.
Revenue and profitability overview. Let's start with the top line. The Home Depot reported net sales of $41.4 billion for the third quarter, marking a 2.8% increase from the same period last year. John, what are the key drivers behind this growth?
The sales growth was primarily driven by the recent acquisition of GMS Inc., which contributed approximately $900 million to the quarter's sales. However, it's important to note that comparable sales only increased by 0.2%, indicating that organic growth was relatively flat.
And how did this impact their profitability?
Despite the sales increase, net earnings were flat at $3.6 billion, with adjusted earnings per share slightly down to $3.74 from $3.78 last year. This suggests that while sales grew, profitability was under pressure, likely due to increased operating expenses and a lack of storm-related demand.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of $3.81, but the Home Depot reported an adjusted EPS of $3.74. What does this miss mean for the company, John?
This 0.07 miss against analyst expectations indicates some challenges in meeting market forecasts. The company attributed this primarily to the lack of storm activity, which typically boosts demand for home improvement products. Additionally, consumer uncertainty and housing market pressures have also played a role.
How significant is this miss in the broader context?
While it's not a massive miss, it does highlight the challenges the Home Depot faces in the current economic environment. The market reaction will depend on how investors perceive the company's ability to navigate these headwinds moving forward.
Operational efficiencies and future outlook. Looking ahead, the Home Depot has updated its fiscal 2025 guidance. Can you walk us through the key points, John?
Certainly. The company expects total sales growth of approximately 3.0%, with GMS contributing about $2.0 billion in incremental sales. They're also planning to open 12 new stores, which should help drive future growth. However, they anticipate continued pressure from the lack of storm activity and consumer uncertainty.
And what about their margins?
The Home Depot is projecting a gross margin of around 33.2% and an operating margin of 12.6%. These figures suggest that while they are managing costs effectively, the overall margin expansion is limited due to external pressures.
CEO's perspective and strategic initiatives. CEO Ted Decker mentioned some strategic insights in the report. What are the key takeaways from his statement?
Ted Decker acknowledged that the results missed expectations due to the lack of storms and consumer uncertainty impacting demand. However, he emphasized that the Home Depot is growing its market share and executing its strategy at a high level. He also expressed confidence in the company's ability to navigate these challenges, thanks to the dedication of their associates.
How does this align with their strategic initiatives?
The focus remains on expanding their market presence and optimizing operations. The acquisition of GMS is a strategic move to bolster their product offerings and sales, and the opening of new stores aligns with their growth strategy.
Key takeaways. In summary, the Home Depot's Q3 fiscal 2025 results show a mixed performance with sales growth, but a slight miss on EPS expectations. John, what should investors take away from this report?
Investors should note the solid sales growth driven by strategic acquisitions, but also be aware of the challenges posed by external factors like consumer uncertainty and housing market pressures. The company's updated guidance reflects these challenges, but their strategic initiatives and market share growth are positive signs for the future.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on the Home Depot's performance in the comments below.